Today on Fear and Greed, two of the country's biggest companies report profits, and one pleases while the other disappoints. Prime Minister Anthony Albanese is cautiously optimistic that the Trump administration won't levy tariffs on Australian steel and aluminium, and get ready for more expensive bananas and sugar. Plus, Aussie Post does a deal to open more bank branches in the bush, and consumers and businesses are slightly less grumpy than they were at the end of last year. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 12th of February 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, two of the country's biggest and arguably least understood companies outside financial markets reported yesterday, and one was poorly received and the other one was well received. We'll start with CSL. CSL's share price fell 5% yesterday after the Blood Plasma Group announced a solid result but said lower vaccination rates in the US hurt first half sales for its vaccination business.
CSL is Australia's third biggest company. $126 billion is what it's worth, behind Commonwealth Bank and BHP. It ran really hard in the decade pre-COVID, struggled because, of course, the services it was offering basically closed down, and it's never fully recovered. In fact, it's down. CSL share price is down 8% in the last year, while the market's up 12%. A lot of its operations are in the US. It has three main businesses. The first one, CSL Behring, which is a blood plasma collections group. It's going pretty well. 2/3 of revenue comes from that business. Margins have been squeezed as CSL has had to pay more to attract blood donors in the US. Been a bit of a problem, but generally that business is okay. Second business, Seqirus, provider of vaccinations. Not so good when your biggest market is the US and the new boss of health in the US is an anti-vaxxer. Problem there. The third part, Vifor, is an iron deficiency business. It's only been owned for 2 years. Finally, there are some signs of improvements with sales up there, but it hasn't been a good business thus far. So plenty in CSL's results yesterday to worry analysts.
Sean, the other company is Macquarie Group. It gave a quarterly update, and the financial behemoth said that things are on track with earnings in its asset management business, offsetting lower earnings in other parts of the business, those parts that are reliant on global markets and commodities trading.
Now, I defy anyone, including the CEO, Shamara Wickramanayaka, to fully explain in English what Macquarie does. It seems to have its finger in all sorts of pies, and that's actually what Ms. Wickramanayaka was talking about yesterday. It said it has so many different businesses that diversity means it actually will perform well no matter what the economic cycle. Yesterday, there was a lot of attention around its green assets. So it's selling a European solar energy developer and an offshore wind developer. Now, Ms. Wickramanayaka said she wasn't concerned about the company's green assets in the US, given the Trump administration's lack of enthusiasm for such assets. She says if some of these assets take longer to sell, then they're closer to production and worth more. Point of this story is it's incredible how Donald Trump and the administration, what he has said in the last 3 weeks, has affected companies like Macquarie Bank. All in all, its share price closed up 2%. Those analysts who argue that they do know what's going on inside the walls of Macquarie Bank thought it was a pretty good result.
Sean, I was just, while you were talking just then, I was thinking about what you said before about the blood donors in the US. And it always feels so strange, doesn't it, that donors in the States are paid for these, and that's actually a cost to CSL that they need to factor into this, because it's just not something that happens in Australia. So it feels entirely foreign to us. And I was just looking up to see how much it costs. And so for blood plasma, for instance, payments can range between $30 to $80 per donation. It's a fairly sizable whack.
That's a lot of money.
Yeah, certainly is. Anyway, just a little bit of bonus info there for you today, Sean. The local market. We've talked about CSL. We've talked about Macquarie. What about the rest of the ASX?
Plenty of results. We'll come to a couple more in a moment. The S&P ASX 200 initially rose and then spent most of the rest of the day falling. finished pretty much unchanged, 8,484 points. Broadly, a good day for industrials and tech companies, not so much for energy and healthcare stocks on the back of that CSL result. Gold hit a new record yesterday, so some of the gold companies did very well. It's not quite at that $3,000 an ounce figure, but it's getting very, very close. And lithium stocks fell back after news that a major lithium producer in China had restarted operations. Liontown Resources, big lithium producer here, it was down 9%, the worst of the top 200.
Sean, the federal government is cautiously optimistic that Donald Trump's administration will not levy tariffs on Australian steel and aluminium. When we're talking about this time yesterday, there was a great deal of uncertainty over it, and that was ahead of the Prime Minister's call to the President. We're now on the other side of that call. Still a bit of uncertainty around it, though, isn't there?
There is. So the two spoke for 40 minutes, the first call since Donald Trump became president. Anthony Albanese said he had a great conversation and the US-Australia relationship is in good shape. Donald Trump told reporters he was considering a carve-out because Australia is one of the very few nations with which the US has a trade surplus. He described Anthony Albanese as, I quote, a very fine man. He then went on to highlight the fact that the reason Australia has a trade surplus, as in we spend more money in the US than the US does in Australia, was because Australia buys planes, particularly Virgin and Qantas from Boeing. That helps the trade balance there, at least in Donald Trump's eyes. Mr. Albanese said he pushed that trade surplus line. He also talked about bilateral defence and security relations between the two, the fact that there's a bilateral free trade agreement. They agreed to say that an exemption is under consideration. We're not there yet. And certainly Donald Trump, in signing in a new tariff yesterday, cancelled exemptions and duty-free quotas for other major suppliers like Canada, Mexico and Brazil. But the PM is just a little bit cautiously confident, shall we say.
Yeah, I like that. Now, after the show, Sean, you have an interview coming up with Dr. Kevin Hebner, who is the Global Investment Strategist at Epoch Investment Partners. Now, this conversation started in one place, finished in an entirely different place, and it was fascinating.
Yeah, so we started about AI and whether or not we're in a boom, something like the late 1990s, and went to a break and we came back and we just got stuck into tariffs. And I think this is the first time that someone has given me a good rationale for why Donald Trump is levying tariffs around the world. And not a value judgment whether it's good or bad. He just said this is the thing behind it, and this is why the Trump administration thinks it's a good reason to do it. And it's well worth a listen.
Oh, it so is. It is coming up after the show. We've got plenty more to come, Sean. We're talking banana and sugar prices rising. We've got more bank branches in the bush. Elon Musk's bid to buy ChatGPT. Big show. We'll be back in a moment with the rest of the day's business news. Sean, banana and sugar prices are set to jump on the back of the North Queensland floods.
Treasury estimates that up to 20% of Australia's banana crop could be affected by the disaster, the rain that we've had in recent weeks. There's also damage to road networks that's hurting supply chains. Jim Chalmers, the Treasurer, said the flood-affected region accounts for about 4% of agricultural production in Australia. What it means is that some things like sugar and bananas could get a lot more expensive, but it's sort of a narrow number of goods. That's a good point. In terms of total economic activity in the economy, the floods will amount to a 0.1 percentage point reduction in March growth. Doesn't sound like much, right? But we only grew 0.8% last year. So 0.1 percentage point is quite a bit.
Sean, just quickly on bananas, over the weekend we received a note from Buster, who listens to Fear and Greed. He works and lives in far north Queensland, and this was fantastic. He sent us a couple of pictures and a message via Instagram, and he said that because of the floodwaters in far north Queensland, they hadn't had a delivery of groceries for several days into a lot of the supermarkets up there. But what they did have, essentially, is this oversupply of local bananas. Yeah. And so the pictures that he sent us, and we did share these on Instagram over the weekend, is just in your fruit and veg section of the supermarket, bay after bay after bay, full of the most fantastic looking bananas, and they're all on sale for $2.50 a kilo. And every single other space in the supermarket is empty.
Empty. Yeah.
It is just bananas. So if you like bananas, you are set. And so thank you, Buster, for sending those ones through. Sean, there'll be more bank branches in the bush with the federal government increasing funding for Australia Post's banking operations.
Currently, Commonwealth Bank, National Australia Bank and Westpac have a deal with Australia Post so that it offers banking services in some regional locations. ANZ has always stayed out of that. It's decided it will jump in. Macquarie and HSBC are in negotiations about doing it. Aussie Post outlets will, in some regions, now offer banking services. They're the regions that they didn't before. The government is chucking in some money on that one. Treasurer Jim Chalmers said 36% of bank branches in regional Australia have closed since 2017, but this should stop any more from closing.
Sean, consumers are slowly getting happier, or less grumpy, I suppose, but business sentiment continues to remain depressed.
The Westpac Melbourne Institute survey was unchanged in February, still in negative territory, still a miserable bunch. 3 years of misery, worse since the 1990s. However, Michael, the trend is your friend. At least we're less miserable than we were before. That's the good news when it comes to consumers. In business land, the National Australia Bank survey says conditions continue to trend down, though sentiment looks to have stabilised. Unlike consumers, businesses, at least, they've stabilised in positive territory. Combined, they probably suggest the worst is behind for the Australian economy.
It was a pretty good day yesterday for the media companies, with Nine's share price jumping 13% and Seven West up 6%. That's after the latter said that the ad market is showing signs of turning.
So Seven West Media is part of the Stokes family empire. Now it's a big drop in profit. It's actually part of a company called SGH, formerly known as Seven Group, Boral, Westtrack Business. Some of those companies are in that one. The good news for Seven West Media is a jump in the size of its digital audience, streaming services, 7plus, that type of stuff. In fact, 347,000 new registered users signed up on the back of the Sri Lankan cricket tour that Australia has just had over there. The good news on that front, particularly around the advertising, helped Nine, which is obviously a fierce competitor to Seven, and its share price, as you mentioned, jumped 13%.
Just a quick one, Sean. Breville, the high-end coffee and kitchen machinery manufacturer, is entering China, hoping that the Chinese decide that it is time to make their brews at home.
Exactly. And Chief Executive of Breville, Jim Clayton, really hopes that all those consumers will buy online, because he's not opening shops. He's just going to use online selling only. The company also wants to open in the Middle East, and it's going to look at a base in Dubai. The company's also stockpiled product in the US to avoid potential tariffs, because China's a big manufacturing base for it. All in all, profits and revenue were higher at Breville, though the stock was sold off yesterday, down 2%.
Turning to international news now, and I mentioned this one earlier, a consortium of investors led by Elon Musk is offering $97 billion US, what's that, about 155 billion Aussie, to buy the non-profit company that controls OpenAI, the organisation behind, of course, ChatGPT.
Yes, look, it puts two very fierce rivals against each other, Elon Musk and OpenAI CEO Sam Altman. Now, those two actually co-founded OpenAI as a charity in 2015. Musk left the company in 2019. OpenAI has created a for-profit subsidiary. It's meant that it could raise money from Microsoft and others. Now, Altman is in the process of turning the subsidiary into a normal traditional company, spinning out the non-profit group, according to the Wall Street Journal. Musk and his crowd have come and made the offer. Afterwards, Altman posted on X social media platform, I quote, "No, thank you, but we will buy Twitter for $9.74 billion if you want." Now, of course, Musk paid $44 billion for it. So they're having a good crack at each other.
Oh, I love that it happens very, very publicly. Last one, Sean. Egypt has told the US that Arab states reject US President Donald Trump's widely condemned plan to displace Palestinians in Gaza and take control of the territory.
There was a meeting in Washington. The Egyptian foreign minister stressed the importance of expediting Gaza's reconstruction while Palestinians remained there. The US State Department released a statement reiterating the importance of close cooperation between the countries in the region. Meanwhile, President Donald Trump said the ceasefire agreement between Israel and Hamas should be cancelled on Sunday if Hamas doesn't release all the remaining hostages by then. And while on the subject of the president, he's ordered the Department of Justice to halt the enforcement of a ban on Americans bribing foreign officials. So he's halting the ban on bribes.
Okay. All right. Sean, up next is the Fear and Greed Daily interview. Kevin Hebner, Global Investment Strategist at Epoch Investment Partners, is your guest. It is an absolute must listen. It is in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is also where you sign up for our free weekly newsletter, which comes out later this morning. So head along to the website now, pop your email address in, and it will land in your inbox in a few hours. Thank you very much, Sean.
Thank you, Michael.
It is Wednesday, the 12th of February, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson. That was Fear and Greed. Have a great day.